sent today. Check for me IS 30. So who has got any? Yes. Disclosures in the financial statements of banks and similar financial institutions. All right. So right, that is our topic. Disclosure. Disclosure in the financial statements of banks. These are financial institutions, the banks. Just to make. I'm going to let come a forex. You will count the same and similar financial institutions. And similar financial institutions. So let's do some write-ups. So this topic is new. It's new in section 5. It used to be taught in section 3. So they brought it to section 5. I think since they brought it, they captured it in your pilot paper. Then again, they have examined it. I think last sitting but one they examined that topic. So by then you are supposed to know which topics they introduced from section 3. The ones which were pulled direct from section 3 is banking, and banking they have examined, and also they pulled insurance. And insurance they have not examined. Be very careful. So write there and say the objective, we are writing, the objective of IS 30, the objective of IAS 30 is to prescribe the appropriate, presentation and disclosure standards, for banks and similar financial institutions. Similar financial institutions. Full stop. Full stop. Down there, you say terminologies. Terminologies. Number 1, placements. Stock, overnight lending. Placements, stock, overnight lending. Then you say it represents interbank borrowings. It represents interbank. Interbank borrowings. Full stop. So when KCB borrows from equity or equity borrows from KCB, then such borrowings is called placements. So in the question, the only thing they can do, they will tell you, we have 2 placements. We have placements to or placements from. So placements to in the books are treated as what? Assets. From is what? A liability. Because to, that bank is the one which has done what? Given out the loan. So they need to they need to receive back. But placements from is a liability because we will make copper. So when we get in the question, placements to amounted to 1 million, placements from amounted to this, you know how to go about it. Number 2, off balance sheet items. Off balance sheet items. Off balance sheet items. Then you say, these are items and transactions These are items and transactions which should be disclosed. Which should be disclosed to the financial statements. Should be disclosed to the financial statements. Full stop. They are not recognized. They are not to be, sorry. They are not to be recognized. They are not to be recognized in the financial statements. They are not supposed to be recognized in the financial statements until they are deemed, to have been realized by the bank. They are deemed to have been realized by the bank. Deemed to have been realized by the bank. Full stop. Correct. They include forward future contracts. Now, future forward contracts. How do you say it? Future forward contract or forward future contract, whichever makes you happy. It's just one and the same. Number 2, letters of credits and guarantees. The first one was future forward contracts. Then 2, letters of credits and guarantees. Letters of credits and guarantees. Contingent liabilities, swaps, etc. So maybe I can explain. Off-balance sheet items, they are those items which, even if you find them in the financial statements, in the question or in reality, you're not supposed to recognize them in the financial statements. Like, look at the letters of credits and guarantees. The bank has acted as a guarantor to someone. Maybe when you want to import some things, the bank bring a guarantor, and the guarantor must be the bank. So if the bank is acting as your guarantor, they are not supposed to capture that amount in their books that there is this. No. They need to disclose to the financial statement, telling the users that there is a amount we guaranteed a third party which sums up to this. So, disclosure is what you tell us after preparing the financial statements. If there is letters of credits, there is credit which they have given or checked in for someone to be given, then they should not be captured in the financial statements. Future forward contracts, bring them in the books when they are deemed to have materialized. They have been realized, or they have paid, or they have been paid. So when you get them in the question, like them telling you the total letters of credits amounted to 10 billion, then that amount you don't capture in the financial statements. You just disclose it after preparing books. Just give that disclosure. Next, number 3, exposure. Exposure at default. Exposure at default. We'll be calling this one most of the times EAD. exposure at default. Exposure at default, EAD. Then you say, is the total value of the loan, outstanding loans, sorry, is the total value of the outstanding loans, total value of the outstanding loans at the time the borrower defaulted. At the time the borrower defaulted. At the time the borrower defaulted. Full stop. So the amount which was there when they defaulted was 10 million. That is called exposure at default. Next, loss given default. Loss given default. Loss given default. This one is called LGD. LGD. That is loss given default. Then you say, is the expected loss, is the expected loss, is the expected loss, expected loss due to the probability, expected loss due to the probability of the borrower, probability of the borrower defaulting on the loan. Defaulting on the loan. Full stop. So if they fail to pay, what loss are we going to incur? That loss which we are expected to incur is called loss given default. Then there is probability of default. Probability of default. Probability of default. This is called PD. Probability of default. Then you say, is the likelihood that the borrower may default on the loan. The borrower may default on the loan, i.e., the borrower will be unable to meet the debt obligation. The borrower will be unable to meet the debt obligation. Meet the debt obligation. Full stop. So that probability, I hope that is what CRB uses to know whether you are capable. The probability of you defaulting. So do you take loans? So if I give you, I have just given you. So fine, next. Next you can write for me NB. NB. In case of a default, in case of a default, comma, a bank is required to determine the overall expected loss. The overall expected loss. The overall expected loss, which should be determined as follows. Which should be determined as follows. So, overall expected loss, we normally call it ECL. ECL stands for expected credit loss. Expected credit loss. ECL will be the exposure at default, which was the total amount of the loan at that time. Then you check the loan given, the loss given default. Then you multiply with the probability of that person defaulting the loan. That is how we get the ECL, the expected credit loss. So when you are required to determine the total expected credit loss, you take the exposure at default. Exposure at default is the total loan by that time. Then the loss given default, so the loss which they can incur when this person fails to pay the debt, times the probability that this person is likely to not to pay. So the overall, when you multiply all this, you get what is called the expected credit loss, ECL. Down there. You say from 1st January 2018, from 1st January 2018, from 1st January 2018, yes? No, we are writing. Not illustration. We are writing. From 1st January 2018, all banking and financial institutions, because I know this one is very, okay, let me not demand to know, but if you wish to tell me, fine. If we have bankers, they know what they are undergoing because this thing is new. They are really suffering because of, this one is covered in IFRS 9, those financial instruments, the one we did. These things came up just the other day. They are not that old. And all banks are required worldwide to comply with this standard. Before you give loans, kindly check the probability of default and project the expected credit losses. So we are saying from 1st January 2018, all banking and financial institutions are required to prepare their financial statements, in line with the provisions of IFRS 9. In line with the provisions of IFRS 9. I repeat for Thomas, from 1st January 2018, all banking and financial institutions are required to prepare their financial statements in line with the provisions of IFRS 9, full stop. Another hyphen. IFRS 9 requires banking institutions IFRS 9 requires banking institutions to carry out due diligence, including the probability of default, at an early stage, in order to minimize the expected credit risks. Full stop. Another hyphen. Similarly, the standard requires banks to provide sufficient provision for doubtful debts. Similarly, the standard requires that a bank should Provide sufficient provision for doubtful debts in relation to the outstanding loans, full stop. So what normally now the challenge again, which is coming up, you know, that is what the standard requires, that immediately you give a loan, make provision immediately, provision for doubtful what? Yes. Those of you who are in audit normally says there's something you normally say called professional skeptic what? Skepticism, meaning you approach with questionable what? Mind. So when yes, they have given loan, but they should be skeptical that this person, even if the probability of default was quite low, this person can still what? Default. So they give provision for doubtful debts. Wamekupea lakini bado wanakushuku. Wanaweka provision. So where the problem comes, the provision in this case tends to be specific in nature because they know they are against who and who. And specific provisions you are allowed to deduct for tax purposes. So specific provisions are deducted for taxation. So it means these people will understate the profit, ending up paying less tax. Then the people to whom you had suspected and provided the provision against, they are now coming back to do what? To pay. So how do you go about the tax part? And the examiner is likely to ask you to explain the implication of IFRS 9 on banking, and by extension on taxation, on tax liabilities. So it affects tax this way. When you make provision, you will likely, not even you likely, because the provisions are specific, they know they are making against which customers. So when you make this provision, you'll be understating your profits. You understate profit, you'll also understate what? Tax. Then the person to whom the debt was being suspected comes back and pays. So you see your provision, you know, when the provision decreases, we treat the decrease in provision as income. So it means you understated tax. So how do you mitigate about tax? So let's write up, though it might not be very structured, but somebody can challenge you there to explain the impact of IFRS 9 on banking institutions and by extension on tax obligation. How does it affect tax? So you say the provision for doubtful debts leads to understatement of profits and tax liabilities. Understatement of profits leads to understatement of profits and tax liabilities. Full stop. Continuation. A bank should therefore provide that one is going to be a long story. A bank should therefore provide a deferred tax. Provide a deferred tax in the financial statements. In order to cover any tax obligations which may arise, in the event that the doubtful debts decreases. to cover, you say to cover? To cover the tax obligations which may arise in the event that the doubtful debts does what? Decreases. Full stop. We leave it at that point. I want to explain. What I want you to know is this. We agree. Okay, the standard requires you carry out due diligence so that you check the probability of what? Default. And you have agreed this person, from the looks, 20-30% chances they may fail to pay. So we are giving them loan of 1 million. So the probability of them not paying is 20%. So 20% of 1 million, these people may fail to pay 200. So that 200, we capture it in the financial statements as doubtful what? Debts. So when you capture the doubtful debts, you will reduce what? Profit. You reduce profit, you are also reducing what? The tax. So what the standard requires, because these people might come back and pay, because probability is not sure, but it's just, it's uncertain, 50-50. So what the standard again requires, make provision for deferred what? Tax. That in case they fail to pay, you still have that amount to do what? To pay for taxation. So the deferred tax part is what I want. If someone challenges you on the IFRS 9 on taxation, it's all about the bank making provision for deferred what? Tax. So that in case of future taxes, we have something to pay. Nothing much. Get out your past papers. Get out your past papers. I want to take a roll call from online. Those who are day class, can you just say present, so that I can know how the classes are represented? Kindly. So, Damakli, are you in day class? Damakli, you are lying. I know you very well. You are in evening. I want day class first to say present. In that paper, we want to check pilots. Pilots 2021, December. So Veronica is present. Who else is present there from day class? So I can see Veronica. Karen is there. Who else? But because they were among a few, how many hours will be on Natasha? So I can put that again. Those ones are now. So mostly I wanted to know about days, so those are out, okay. That's those who are finished. Which page? 16. So focus on page 16. Question number 2. Question 2, page 17, or thereabout. Better footer within that line. So let's read. Mine is not. It's not what. Hoping that everyone is there. Hoping that everyone is there. Let's read. You are given the following list of balances for Star Bank Limited as at 31st December 2020. Unakuwa na Star Bank hapa Kenya? They are not supposed to mention the name of a bank. Eh? You know they can be sued. Well, when you write maybe Absa Bank here, you know they can take you to court. Yes, and you are telling students our cash and cash with central bank is 23 billion. So you cannot use the name of specific, you write something. Ukishindikana unaandika XYZ ama inakuwa XYZ ama ABC Bank. So let's read them. There is cash and balances with central bank. Financial assets at fair value through profit or loss. Financial assets at fair value through other comprehensive income. Installment tax paid. Due from other banks. Loans and advances to customers. Expected credit loss allowance on 1st January 2020. So that is the expected credit loss at this beginning, at the beginning of the financial period. Let's proceed. Then property and equipment, intangible assets, interest income, interest expenses. I also forgot to mention, but I tend to believe you are aware, that the main source of income for banks is the interest. Interest forms their main source of income. So when you are required to prepare their P&L, you first of all focus on the what? Interest. So, yes. Then fees and commission income, fee and commission expenses, income from forex trading, other incomes, impairment loss on loans, staff costs, other operating costs due to other banks, deposit from customers, other borrowings, other liabilities, net pension liability, deferred tax, share capital, fair value reserve, retained earnings. Additional information number 1, accrued interest income and expenses at shillings 240 million and 100 million respectively. So they're supposed to say 1. For the purpose of estimating the expected credit loss on loans and advances at the end of the year, the following aggregated data is available. So they wanted to know the expected credit loss, we say is the overall, the overall credit losses. So to estimate that, they gave us this information where they gave us loan categories. So they had how many loans? 4. Category 1, 2, 3, 4. Exposure at default. So exposure at default is the loan amount at the point when someone has refused to do what? To pay. Uko na loan mahali, and how much was the loan? Loan was 10,000, you have paid 2,000. And when the loan was remaining at 8, you have failed to pay. That 8 is what we call exposure at what? Default. So those were the loans. Then probability of default was estimated at the percentage. For this loan category number 4, what is the probability of default? 100%. That is serious. Then we have loss given default. Sawa. Depreciation and amortization expenses. We are able to solve it one by one because at that stage, because what have they said? For the purposes of doing what? I will go back to that note too. Why have they given that information? For the purpose of estimating the expected credit what? Loss. So before able to determine your expected credit loss at that stage. So to end the two is analyze. So our working one there, you say ECL. We want to get the ECL. ECL is the expected credit loss by ruler. So ECL you will give us the loan category. Loan category. There are how many? 4. 1, 2, 3, 4. Then here we had exposure at what? At default. Here we had probability of default. Alafu kumbusha tulikuwa na weka hapo. So capture the loss at there.
Genial. Sorry.
Poleni. I got an emergency hapo chini, so tulikuwa tunasaidia. Student wetu alikuwa amepark bike, I don't know what, akawacha jana. So soldiers walikuwa wamemsumbua, so tumesoma. Pole. Haya, so this is, we have LGD, and now we'll get E. How much fun? So what is the total answer here?
1960.
1960. Like this?
Yes.
Do I assume that everybody has done?
Yes.
No, no.
Alright, so let's put it together. So this is 22, 354, 55, 59, 5% is 0.05, 0.1, 0.5, 1, 1, 0.5, 0.3. So somebody is making noise. There's somebody who has joined with the Infinix. Tracy, also mute yourself. Someone using Infinix, kindly. So you multiply. So when you multiply, you get 19,660. Thank you. Now check trial balance. Not trial balance, it was a schedule. Was there expected credit loss at the beginning?
Yes.
Nico? Yeah, I heard it somewhere. 17? There is expected credit loss in the schedule on 1st January, which is 17,360. So we need to do a small reconciliation there. You come here and say, ECL account, expected credit loss account, balance brought down. Balance brought down. How much is this? 17,360. Balance carried down. When we are closing, the expected credit loss is now 19,660. Meaning there is an increase. So the increase is what will go to P&L, because at the beginning the expected loss was 17. At the end it is now 19. So the increase is what we charge the P&L. So to profit stock loss, the balancing figure, the increase Then this one will subtract from the loan value, the total expected credit loss when we are preparing the balance sheet from the total loan will reduce by this. You remind me, so yes, by this. So how much is the increase? Increase is 23. So that 23 is what will go to P&L as PCL. If there was no opening, then the P&L will charge the whole amount of 19,660 because we say it was 0. So the whole amount came during the year. So, are we okay? Let's move to note number 2. Let's move to note 2. So this one will subtract from the loan amount in the balance sheet. Note 3, depreciation and amortization expense for the year amounted to 200 million to 200 million amortization. So meaning depreciation is 1. Yes. So that one has no problem. Let's go to note 4. Let's go to note 4. The following are the estimated fair values for the financial assets. Fair value through profit and loss, that through other comprehensive, that is not a big issue. We'll just check the gain or loss on their fair value. And what they are focusing on through profit and loss, if there is a gain or loss, you charge to P&L. But the one for other comprehensive, it will come down there after you have prepared the P&L after tax. You say other comprehensive, you capture it down there, that loss or gain. The bank operates, I never knew this one is here, but now let's just cover it. Then when we go to that topic, it will be easy. This number 5 is a whole topic, but you will just have to understand that the bank operates a defined benefit pension plan, except for the contribution made, which is included in the staff cost. Okay, the following details have not been accounted for in the year. So we have plan obligation. Plan is the scheme. Plan obligation, fair value of the plan assets, current service cost, benefits paid, interest rate, cost estimate is 8%, expected return on plan asset is 6%, contributions made, plan obligation, fair value of the plan assets. So this is employee benefits. Employee benefits is a topic on its own. But what they want us to get, when you have employee benefits, there is always the interest which you can get on what you have saved, or else they can also charge you on the pension. So you need to check how much is the interest expense for operating the scheme, and how much is the interest income, which they are calling the expected what? Returns. So we need to do some small workings to get this. So call it working 2-1. So working 2-1, you talk of plan obligation. We want to check with the plan, we want to check whether we gained or we lost. I want us to check whether we gained or we lost. What was the plan obligation at the beginning? Let's start with obligation, then I'll go to assets. You know, in the scheme, when you are contributing, other bank will be saved. So kuna kwanga na ledger fee. Yes, so how much was the balance at the start? Plan obligation on 1st January was 42.50. Then these people told you, we will charge you interest on the outstanding obligations. So interest charge, so check the interest cost. Interest charge is what percentage? 8%. So you take 8% of the outstanding obligations. That one comes to how much? Mm-hmm. 340. Then there is current service cost to maintain the scheme. It will increase your obligation. So current service cost. Current service cost is how much? 460. When you are paid benefits, you reduce the obligation in this because obligation is assessed based on the contributions you have. So when you have been paid benefits, reduce your liability and also reduce the assets you have. Both. So benefits paid. Benefits paid. When you are paid benefits, benefits reduces the two at the same time. Benefits paid is how much? What? So how much was supposed to be the scheme? Scheme was supposed to have 59, 50, 10. Skip one line. How much is the plan obligation at the end? Balance carried down. We have been given somewhere there. 51.90. 51.92. So ideally, you know, this is an estimate which is normally done by the actuaries. So they give you the estimated amount which will be charged in the scheme. So they tell you your scheme obligation will be 50.10, but the actual is 51.92. So the balancing figure is called actuarial gain or actuarial loss. So have we lost or we have gained? Is this actuarial loss or actuarial gain? Wacha nisikie kutoka kwa watu. Online, is this actuarial gain or actuarial loss? We expected the obligation in the scheme to be 50.10. Obligation came out to be 51.92. It is actuarial gain or actuarial loss. Sema tu. No victimization. Some people are saying loss, some people are saying gain. Which is which? So many people are saying loss. That is actuarial what? Loss. Kwani wewe ukisikia rumors hapa kwa class ati customer watu wanalipa 50-10. Wewe ukifika unafaa ulipe 50-10. Ukifika unaambiwa wapi ni 51.92. You have gain. Increase in obligation is again is a loss. So that is a loss. The obligation has gone up than expected. So that is actuarial loss, which is how much? 182.
Yes.
Now, tunashughulikia baadaye. Do the same for assets. Do the same for assets. Plan assets. Plan assets. So balance brought down. Balance brought down. How much was the plan asset? So plan asset is what you have saved in the scheme. How much was the plan asset at the start? 32. And the one is only at the frustrate. What was the expected returns? Expected return is based on what you have saved. 6%. So take 6% of that value. 6% of that value. $192. Thank you. Contributions. Contributions, you add. So contributions. How much have they contributed to the scheme? 25. So I can put 25. Benefits paid. Benefits paid will reduce both. So give me the expected actuarial value. You're talking of 3377. 3377. Skip one line. How much are they saying is your contribution, the assets in the scheme? They are talking of 3419. Fair value plan asset, 3419. We have gained or we have lost? The expected amount of your assets in the scheme was projected at 3377. The actual outcome is 3419. We have gained or we have lost? We have gained. Your assets increase in asset. But if it was obligation, it's a loss. But for assets, that is what? Again. So the balancing figure is actuarial what? Actuarial gain. We have gained how much? 42. So we have gained 42. So the interpretation down there, we gained 42, we lost how much? 182. So the net position, you talk of net actuarial what? Net actuarial gain or loss? Loss. Because we lost 182, we gained 42. So take this, reduce the loss with the gain. Sure. So take 182 minus 42. So the net loss is 182. We have lost 140. So this one will go to P&L later. P&L. Then in the scheme, obligation to kifunga mwaka obligation ni ngapi? 51.92. Our asset is standing at 34. So it's good to say net pension liability. Net pension liability will be, we have a liability of 51.92 and our asset is how much? 34.19 at the end of the year. So the net liability will be how much? So if you go to the balance sheet as a liability. You're talking about 17? 1773. 1773. Non-current liability. Oh, so all those others, fine. Unless you can also do something in regards to that interest, they charge us interest of how much? 340. And also there is an interest we receive, the expected return 6%, 190 what? 2. So you can even say net interest expense. But it's true. Let's not concentrate on one thing for so many things. Let's go to number 6. But it's good. This is a topic. It's a topic which will come later. So to think up with a Number 6, the net taxable temporary differences, even deferred tax, we have not done. The net taxable temporary differences as at the end of the period are estimated at shillings 9,300 million. This excludes any temporary difference from note 4 and 5. Excludes any temporary difference from note 4 and 5. Oh, those ones of revaluation, no. The tax rate is 30%. Meanwhile, the current tax for the year is estimated at how much? 28. I know what they want. They want us to get the total tax obligation, which we can do. Yeah, we can do. It's not that bad. Up there, deferred tax account. What is up on deferred tax account? Deferred tax account. How much was the deferred tax liability when we opened the year? Balance brought down. Check in the schedule. Go chap chap. How much? I saw it somewhere. 24. Yes. So when we started, there was a deferred tax of 24. At the end of the year, when you want to get deferred tax, what you do, just take the temporary difference, you multiply by the tax rate. Utapata deferred tax. So temporary is 93. We don't even need those note 4 and note 3 and 5 they are talking about. Take 93 times 30%. 93 times 30, you get 27. Like that. Eh? So deferred tax at the beginning was 24, it went to 27.90. So the increase in deferred tax will go to P and what? P and L. P and L, how much? 390. So we will have a deferred tax of 390. Therefore, total tax expenses will be deferred tax of 390 plus current tax. Current tax they have said is how much? Check that note 6. Current tax they have estimated at how much? 20? 28. So plus 28. Therefore, we'll be reporting how much? Huh? 31.90. So that is it. That is it. So can we go to required? Required. Prepare the following financial statements: the statement of profit or loss, then the statement of financial position. Andika hapo Starbank, Starbank. So right there, Starbank statement of profit stroke loss for the year ended for the year ended 31st December 2020. I'm used to my ruler. So shillings are in. So shillings are in millions. So I told you the main source of income for this bank is what? Interest. So can you look for interest, please? Put where there is interest. That is where we will concentrate first. There is interest, income. So start there with interest, income. But there was a note on interest. Check note number 1. Accrued interest, income, and expenses were 240.5. Yes. So accrued income you add. So interest income they have given 29. 0 plus 240. plus 240. $20, 29, 301. There was also interest what? Expense. Interest expense, 70 plus the accrued, 100, giving us 7169. You subtract to get the net interest. So net interest income . 22, 132. Then this one is normally the normal interest on loans. There are some other interests. So there is interest charge on plan what? My interest charge on the pension. On pension. So please, you will help me. Check for me the one we charged on the obligations and the one we charged on which one? On the assets. Then get the net. So how much was on obligations? 340. On assets? What?
92.
So we reduce that? Yes, because this was an income, this was a charge. So reduce the two. You get? 148. This one is an expense. In our expense, let's capture them here. Interest charge 148. Then there are some things I want us to check. Check for me. Check for me note number. Very key. Note number 4. There is fair value, financial assets at fair value through profit and loss, which is estimated at 29,708. What was their value in the trial balance? Check financial assets at fair value 29,108. We have lost, we have gained. 29,708. Na hii ilikuwa? No, book value was 29,108. And at the end of the year, 29,708. We have gained. Yes, there is an increase. Sasa tutafanya hadi hizi vitu. Kama tusukume iende huko. Unaweza isukuma ikuje huku. Then you bring increase in fair value. Fair value of financial assets. Financial assets through profit and loss. 29,708 minus 29,108. An increase of how much? 600. That one you can credit there. Then your interest issue Can you check about the schedule if there is any income? I want to deal with income first before I come to expenses. From top, there is fees and commission income. So fees and commission income. So hii imetupatia ni interest. We could have dealt with income at the sawa. Wacha ikae hapa. Fees and commission income is how much? 67.11. Is there any other income? Income from forex trading. So income from forex. From forex, how much? 40, 45. Other incomes. Other incomes is how much? 32. Operating cost, no duty, what, nothing. So in the trial balance, there is nothing. Note 1, we have captured. Note 2, ECL is an expense, depreciation expense. Note 4, done. Note 5, we have captured that interest which we find. Tax later. Can you add, get for me the statement minus that plus all this, give me the total gross, then we go to expenses. Then start capturing expenses which you can see. It's also good for you to check out. So can you capture all the expenses you are capable of seeing? Ikunywe maji. I hope watu wamesonga na expenses. I can also join. So for the expenses, let's one from top. Fees, commission, expenses. Yes. Fees and commission. Expenses. How much is this? 1086. You have it in the first column. Income, no. Impairment. Have you captured impairment? Impairment, loss on loans. How much? It's 32. Sir? 38, 71. Staff costs. Staff cost, there's something which was done. Staff costs is how much? 11, 184. 184. But there is a problem. Where's the problem? Note number. Note number 5. The bank operates a defined benefit pension plan, except for the contributions made, which is included in the staff costs. The following details have been fine. So benefit contributions they're making are let up as part of the staff cost. So that one kindly subtract that staff cost as part of this. That 40. Total income Thomas is saying 30, was 33? 33? 72. This minus this comes to how much? 11? The contribution to Meles. What the contribution is how much? Oh, contribution is for 60. The contribution is supposed to less, not benefits. That is what they had included. Thank you. Let me respond to who? Felix, what is the issue? Impairment is not affected by note 3. No, note 3 was about amortization. So how much is that? Kwani mimi naliona reverse. Oh, contribution iko chini. Na kuna mtu ananifuata. Minus 25. How much is that? Yeah. 11. 159. Thank you. We proceed. We proceed. Other operating costs. So online, I'm changing the camera. Other operating costs. Other operating costs. Negative. 47. 94. Bill to no, deposit no, other borrowing no, other liabilities no, net pension no, deferred no, share capital no, fair value reserve no, retained earnings no. We go to note 1, accrued interest due to the Manizana. For the purposes note 1, there was expected credit what? Loss. Expected credit loss. ECL. How much did we get for P&L? Check the account. There's account for ECL we have. How much to P&L? 2300. Okay. So ECL is 23. So note 2 done. Note 3 depreciation and amortization expense for the period is 12, but amortization is 200. So amortization is 200, meaning that depreciation is how much? Depreciation is 12 minus 2. So depreciation is 1. So that's what they mean. See, depreciation and amortization is 12. Amortization alone is 2. So depreciation remains with the balance. Note number 4. No, 4 was wachana nayo tulimalizana hapo. Hiyo ingine libaki other comprehensive itaenda kwa other comprehensive, not P&L. So let it wait. Note 5. Note 5, is there something remaining? Yes. There was actuarial what? Actuarial loss in the other comprehensive. Anything actuarial, you don't bring pension as part of your normal income. So you remind me another comprehensive. Actuarial gain, actuarial loss should go to other comprehensive. No? Current service cost is an expense. So current service cost. How much is this? 460. Interest tulikuwa tumesha net off. Interest charge and the expected return. Those ones we have done. Taxation later. I hope there is nothing we have left. Can you add all the expenses? Please, if you are suspecting something, let me know. Tax will come later. Interest expense, we netted it off somewhere there. The income. The one we got 148. It became an expense. If there is anything tax, I've told you that one will come later. Until we get the profit before tax is when we tax. So tax later. What about deferred tax? Deferred tax we had reconciled. The market we had reconciled to get the total tax expense. So other unit later. All tax must come. We have to get profit before taxes when we tax. So what of the interest expense in the trial balance? So tumemalizana hizo interest. Sindio? Ilikuwa? No, interest in the trial balance ilikuwa sawa 71. Kama gani anasema? Ni. So tulishachukua mpaka tukahat na accrued tukapata this one. So the itapunguza liability tukienda balance sheet. Installment tax ndio hiyo najibu. It will come later. When you pay, we have, tax, you charge the whole amount. Then you can balance sheet, you check if there part you have paid, you part of the liability. But P&L, you charge the whole amount, whether you have paid or you have not paid. So installment tax is part of the current tax obligation. But now we are normally restricted with accruals, charge the whole amount, the one which has been paid or not paid. Then when you go to the balance sheet, you subtract, you take what has been paid, you subtract from the total obligation. So I will deal with it later. Someone is saying total expenses is 24,870.
Yes.
Okay. So bring here 24,870, subtract. Then you give us profit before tax. Profit before tax. How much? 85. 02. Then income tax expense. We had calculated it. How much was our total tax? Check. We did it somewhere there. Check where we did taxation. We did it somewhere. 31? 3190. You subtract. Therefore, profit after tax will be how much? 5312. Other comprehensive income. Other comprehensive. There was, check the fair value, note number which one, student? Note number 4. The fair value, financial assets are fair value through other comprehensive, stated at 63 to 30. Can you check their book value for schedule, in the schedule? Yeah? 62,720, then here 63. We have gained, So fair value increase, financial assets, you take 63 to 30 minus 62, 720. What do you get? 510. You can bring it here. Then we have actuarial what? Actuarial loss was how much? The net actuarial loss. 140. So this was a loss. You can net to get the other comprehensive in total. So that is 510, 140. You get how much? 370. So total comprehensive income, you add plus 5312. 56 to 2. Let's go to the statement of financial position. So right, Starbank. So let's prepare the balance sheet. But Felix is saying, what does the first part of the note 4 stands for? Please check note 4. Felix is asking, what does the first part stands for? Eh? Financial assets. So the first part is about what? Oh, FA.
Yes.
Financial assets. FA stands for financial assets. Even here I'll be using it so many times. Financial assets. So Felix, that is an income. Starbank. Oh, na mtu anaweza kuona kitu kama yuko Mkenya aone hiyo kitu ni ngumu. Hiyo check ni ngumu. Umeleta mpaka FA na CFA. Something funny with banks. Eh? You know balance sheet. How do we prepare balance sheets? We say non-current assets, then current assets. But for banks, that is not allowed. Banks prepare their balance sheet on liquidity. Liquidity, actually, they start with cash. You finish with non-current what? Assets. So itatusumbua your liquidity. So what we do, make sure umeanza na cash help with central bank, umalize na PPE. Hapo katikati tuweke zenye tunaweka. Sawa? Yes. So just write assets. That is how it is prepared on liquidity form. I'm asking the value since it is different from the one at the balances. Felix. What are you asking? That balance is at the end of the year. The one in the trial balance, the schedule was opening. They wanted you to get the gain or loss on those values. And that is what we did. The changes in values we recognize the P&L. If that is what you are asking, there is one which was 60 something, 63, 23, then in the schedule 62. So this is the closing, this is the opening. So the difference is gain or loss. Felix, I hope you get. Oh, wamesema the same. Then it was a mistake on their side. No, because our trial balance, you should have known. All the balances in the trial balance nakwanga opening unless otherwise stated that you figure the closing. Trial balance inakwanga at the start of the year. Inakwanga hivyo. All the balances there are always assumed to extract for the sawa. Ama mjaki hivyo. Unless otherwise kama kuna ingine wapi. Is there any way they have stated? You know, when you extract the trial balance record transactions which took place for the entire. So it won't be exactly at the end of that year. So the figures are different. Yes, they are different because of the gain or loss. Felix, ayo sasa uko sawa. Haya, so akijibu cash and balances in central bank. Central Bank 23 531. Then now you bring all your assets, but make sure it's let PP kuja mwisho. Sawa. I bring those other ones. Financial assets. Right. Financial assets at fair what? Fair value through profit and loss. Those are the short term. So take the closing in note 4. 29 708. Then financial assets at fair value through other comprehensive income. Financial assets at fair value through other comprehensive income. How much? 63, 30. Then view from other bands 65, 72. Loans and advances to customers. So loans, loans, you will take 202, 300 minus ECL, the expected credit loss. ECL, the closing, the one we got closing was how much? From our computation. From our computation, Felix. Felix we ulilala. Felix anasema kwa hiyo financial asset we never factored for 29,708 against 29,108. It is true we never factored. Felix we ulilala mahali ndio hii hapa. Ndio hii. Na ukakopi. Na unasema tukufactor we did. So I hope you have seen it. So loans 202, 300 minus ECL. ECL, I'm told, not 23. 23 was the increase which we captured. You know, balance sheet is prepared at the end of the year. Check the balance carried down. The total ECL, it was how much? Huh? 19,660. The total ECL at the end of the year, the one you computed, 23 is the increase which we took to the P&L. So how much is the difference? 180? 640, good. Then, where are we? Expected, no. Property, hiyo weka stack kwanza. Hiyo ndio tutakuja kumaliza nayo. That is the one we'll come and finish with. Intangible assets. Intangible assets. Intangible assets. How much? 1070 minus amortization. Amortization they said was 200. So this is amortization. Now this question, they will bring it one day, very soon. It was a pilot paper. Those pilots, sometimes they pull them. Please don't copy what you are not saying. How much? 8. All right. Proceed. Interest. Okay, apart from BP, hakuna kitu kingine naona. Kama umeona something, please let me know. Or you are questioning. But note 1, there was accrued income. Accrued interest income. Are you aware accrued interest income is an asset? Because it is interest receivable. Sure. Which is how much? 240. Note 1. I'm remaining with PP. Please, if there is something you are suspecting, my eyes might not be perfect. Let me know before I bring PP. PP should be the last one. The one for? Depreciation tutatoa kwa PP. We depreciate PP. We amortize this other one. Umeelewa? Sawa. Any other? Ruth, kuna issue? Yes. Ndio hiyo nauliza.
If you have intangible asset, you have intangible asset.
Umeshaelewa, si ndio? Who is this? Justus is asking, are banks allowed to have properties?
Yes.
People are laughing. Justus is asking something serious. Actually, there was, when those people were making some provisions, banks were not allowed. Wameanza juzi 2014, a bank was not allowed to own any property. Yes, mpaka nili wakaanza, Equity Center, I think ni KCB wakaanza. Then I don't know what happened, how wengine wakafuata. They were not supposed to. So I know Justus knows what is asking. The reason they were arguing that these people hawana pesa yenye wako nayo ni ya watu. So you cannot take people's money. What are interest? You cannot take people's money to construct properties. Then in case the bank is being liquidated, is when you start selling the properties to offset. But they said the property will be having value. So waliargue kesi yao. But kuna hiyo law ilikuwa that a bank was not supposed to have its own properties. Wewe kana pesa, property, a bank was supposed to be money. In fact, they were to operate on rental premises, purely rental. Even insurance companies, there were categories. But nowadays they have. Ukishapata lawyer, sio? And argue. So just as nowadays they do have, but in the old provision they were not supposed to. In the constitution actually. And there are some countries, I don't know which ones, still banks do not own properties. So there being nothing you have seen, they call it PPL, property and equipment. So this is 57, 62 minus depreciation, which was 1. 47, 62. Do you know those who are even restricting banks from declaring dividends until you have a proof that all provision for doubtful debts will be collected? But squeeze they declare first. Other they answer now before checking the ECL. There were 3 provisions. 1, the use of the name bank was prohibited unless sufficient license is given. You remember your dividends and properties. But all of them, near your bank, you cannot open a business when you just call it something bank and you don't carry out. How much is this? You know, we have one more question to go apart from this. But now the learning curve is how much? Just say people will confirm your answer. 311. Whoever is complaining, those are our total assets. Equity and what? Liabilities. Equity and liabilities. Be ready, we kick off. Na sisi tukishikana hivi wenye tuko wote, yes, prayers, yeah. Huh? Hey, but the person requesting for prayers, Pastor, do it. Share capital. Share capital, how much? 27, 16. Fair value reserve. Any reserve inakuwa equity. Hata kama ni reserve ya nini, ukisikia tu name reserve, wewe unakuwa equity. Lakini maybe I can explain to you what fair value reserve means. Market fluctuates. So unakuwa na pesa aside in case of any fluctuation to offset. Umeelewa? Yes, that decrease. So fair value reserve. How much? 429. Retained earnings. Retained earnings in the books, the last item in the schedule, 17,422 plus the profit we got. The profit we got, but exclude other comprehensive, This one here, 53, 12. This one. Other comprehensive actually inakuja hapa kivyake. Other comprehensive 370. So retained earnings, add those two. How much is retained earnings? 92? 92? 22,734. Is there any other reserve? No, then add those equity. Yes, wako na njaa sasa wanaweza peana figures hiyo. 26 249. Hayo haijapita ile ingine. Hii sababu iko na bidii. So let me continue this side. Online here we just come here 26 249. Non-current liabilities. The one I'm remembering very fast was deferred tax. Tell me how much was deferred tax at the end. Check the deferred tax account, balance carried down. Check the balance carried down for deferred tax. $27. The carried down, eh? Okay. 27.90. That is one. Two, there's another one I'm remembering. Define pension liability. You know the pension liability? We netted it off and we got pension liability. Of how much? How much was our pension liability? 70. After we subtracted, please check so that we don't. 17. 1775. 23. Okay. Please make sure you are seeing where the 1773 is coming from. Then current liabilities. Even these liabilities should just be aggregated together. Where are the liabilities? Bring all of them. So let's proceed. Current tax. Current tax. How much were they saying in the last note? Then now subtract. Ile ilikuwa nafurahisha. Tulikuwa mnasema inaitwa installment. Current tax. Current tax initially they said it was how much in total? 28. Minus installment they have paid. Because when you are paid installment tax, I hope you're aware right now people are paying installment tax KRA this month. This is the month for the which installment tax? The third or the third? Eh? This is the third month for installment tax. So once you pay, you reduce your obligation. So how much was the installment tax? 22, 14. So take 28 minus 22, 14. 586. Can you check any liability, other liabilities? There's something I'm seeing, other liabilities. Other liabilities. How much is this? 10. 313. 10. 313. Then we have other borrowings. Other Borrowings, other borrowings, 5096. Deposit from customers. Are you aware that is a liability to the bank? Kuna customer anakuja anaweka ana deposit Moi Avenue. Akifika Westlands, I want to withdraw. So that is a serious liability for the bank. Deposit from customers, 259, 346. Is there any other remaining? Or you can try to add so that we can know whether there's any remaining. Kuna due to other banks? Yes, that one should come. Because due to, yes, due, you're right, to other banks. Due to other banks is how much? 5308. Due to other banks, done, or somebody has reminded me again, that is Adam, accrued expenses. You remember accrued expenses in note 1? Accrued expenses, note 1. I remember it was 100. Sure. 100. Any other? I can see the spirit is live. Add, we can work with the difference. Would have put your difference when you equal, if any. Ikataka kubalance, tunasema kwa nini yako tupea trial balance? Why are they giving us? But I think we have moved the right way. What do you get? Because how? Yeah, so because how means 3. Basi hivi iko na story mingi sana. Si sana. Oh, someone is asking how is the marking done for this one? Statement of P&L 10. So just mark 10 ticks. Then also balance sheets. 10. Ilikuwa? 7. Just 7 ticks. Any 10 in the balance in the P&L, 10 marks. So hata ukishindwa na hizo akina ECL unaweza wacha. Sikuna ticks mingi. I want us to agree. Kuna swali nimeona. I don't know which setting is this. Yangu imetokana, but ziko hapo karibu. I think the same December money. Which setting is this? Nani msali na hapo? There is April 2022, question 4. What do you think? I give you a small break, then we come back. Because nataka tufanye hiyo moja, then ishe hiyo. I don't want to carry bank to next week. Next week tukuje tuwe deferred tax. Can I give you a small break? Ama mko sawa tuendelee? Mimi niko sawa. Kuna mtu ananifanyia hivi. But now it will not take us long when we come back, because now the learning curve is okay. So let's take a break of 5-7 minutes. So it is 11:57. Can we come back at 12:06? 12:06. Online mkunywe maji. Meanwhile, you can be checking that question. April 2022, question 4. This one is called, once we do that, it is enough. Belta. Belta. So, soma hiyo swali. Online mkunywe maji. Ninyi mnakunywa nini? Wait, why are people just specializing in tax and audit? Only one would like to specialize in advanced MA. Adio ndio mbaya. Silabu ndio kuna market. Market baadaye. So check that. People are here to pass. Pass. We have recharged. Eh? Someone is requesting, can we finish by 12:30? So we're going to do what? So when you're not going to pay answers. So you pay answers vizuri. Even by 12:20. Alright, so let's read the question together. Inakwanga hivyo, hiyo pressure inakwanga hivyo, especially mtu ukimalizia CPA inakwanga na a lot of pressure. Na ukishamaliza pia utatamani kurudi. Yeah, it's true. See, I know. Wengi wamaliza wanarudingi hapa. Is there something? Are you offering CS or safer? Haya. Ni ukweli. Unasikia tu mwili inaitisha masomo serious. Haya, si tuko hapa na nyinyi. Ama unaweza tamani hata kurudi usome for fun bila kufanya mtihani. For fun. Oh. For knowledge purposes. Sawa. Sawa. So let's read the question. The following information was extracted from the financial records of Delta Bank Limited as at this. Cash and balances with the central bank, money on demand and short-term deposits, deposit with other commercial banks, investment in government securities, investment in equity instruments, PPE, intangible assets, loan and advances, customer deposits, long-term borrowing, other receivable, other payable, installment tax paid, deferred tax at the start, interest on loans and advances to customers, interest on government securities, interest on deposit with other banks, interest on deposit from other banks, interest on customer deposit, interest on whatever. Then we have admin, other operating fees and commission, ordinary share premium, deposit protection reserve, retained earnings, suspense account. So you suspend the end out. Additional information, number 1. On 1st of April, now that is where now me I prefer tukisoma tunafanya hiyo tukimaliza tumalizana nayo kabisa. So have your workings ready, tutaenda tukiepanga. On 1st April, Delta Bank Limited issued a shilling 450 million 5-year 8% coupon bond at par. The bond will be redeemed at substantial premium, which gives an effective interest rate of what percentage? 12. There were no issue costs. It's okay. The only accounting entry made were to record the cash proceeds from the issue and the annual interest payment of 31st March 2022. So, nini walifanya bank issue? You know, when you issue, you are the one who is borrowing the money. Sure. So it is a liability. It's a liability on your side. So what I want us to do, can we do the amortization? To find that bond amortization, we get the balance of the bond at the end of the year. It was issued in which year? 1st April 2022. 2021, eh? So exactly the beginning of this year. So you only amortize for one year. Sure. So let's do this. So right there, bond amortization schedule. Tumeanza. Just one. So bond amortization. Bond amortization. So bond is only for 1 year. Balance brought down. Finance cost. Finance cost at what rate? Finance cost, we use the effective market rate. Sure. So nafunga mambo ya bonds. So the effective market rate is 12%, but they are paying actual interest. Interest paid at what rate? 7%. Then you can comfortably give me the balance that what? Current down. Let's have that. So 2021, 2022 financial years. No. We were better 2021 on which date? April. That is a financial year which is going to 2022, where we are. So balance brought down was 450. Finance cost will be 12% of 450. How much is that? 54. Then interest will be constant throughout. You know, finance cost is based on the opening, but this one is always constant on this value. So every year, 7%. It's 7 or 8? 8% of the 450. 8% of 450 is 36. So you take the opening, you add the finance cost, then you less interest paid. This is the actual they are paying. So how much do you get? 468. So the mistake they did, they never captured this amount of 468. So in the accounting, this one will be an uncurrent what? Liability. Then this one will go to P&L. Those are the only items we need. You can capture them. Someone is saying something online. 8%, sir. Thank you. So that one is done. That is done. Let's go to note 2. Number 2, as at this, the directors of Delta Limited accepted valuation report by professional valuer, which revealed the fair value of property, plant, and equipment to be how much? 25. The carrying amount of the PP amounted to 1850. Is that something serious? See, there they just want us to check if whether there is revaluation gain or revaluation loss. So I don't see anything very serious on that. Sioni. You to get other comprehensive. Revaluation is also part of other comprehensive. We just say other comprehensive revaluation. So all let's do this. Recap. Revaluation. This gain or loss. Revaluation surplus. Value at what figure? 20 minus 18. So revaluation is how much, honorable members? 650. 650. So thank you. Let's proceed. During the year ended this, the current tax on profit was estimated at 890. At least the carrying amount of the net assets exceeded their tax base by 18. That is the temporary. That 18 is temporary. This carrying amount do not include the effect of revaluation in the two above. The income tax rate applicable is 30%. They want us to get tax. There is the deferred tax part of it, which I want us to deal with. So right there, deferred tax account. Deferred tax account. Balance brought down. Can you check for me how much was the balance brought down? Deferred tax at the beginning. Deferred tax on in the trial balance in the schedule. Yeah? Now a time has come, I have to trust your feet. Yes. 370. 370. Then they revalued. When you revalue, on your revaluation, una tax. You tax it. Si hata ukifanya nini uuze asset huko nje at again. Because sasa tukiuza hiyo asset, sitauza the revalued amount. So CGT, unajua CGT, the capital gain tax. Sitaingia hapo. So instead of so many stories, Once you have revalued the asset, that carry valuation surplus should be done what? Taxed. So revaluation was 650. This one here, the surplus. Company loss una tax this side. 650 times the tax rate, which is 30%. $195. So this is 195. Then balance carried down. Balance carried down. Actually, these people, I know they are preparing to kutushtua siku moja na insurance, but God is watching. Shall overcome. So balance carried down. Take the temporary differences. Whatever they are saying is different or carrying amount more than tax base. It was how much? 1800. Are you seeing 1800 somewhere? Yeah. Are you seeing the 1800? That is the temporary difference. So you take the 1800, you multiply by 30%. They were saying the carrying amount exceeds tax base by 18. The difference between carrying amount and tax base is what should be taxed. How much? 540. 540. So the balancing figure will go to P&L. It is balancing which side? 370 plus this? 565. So it has reduced. So the reduction, that is a deferred tax income. It balances this side. P&L balancing figure. That is a decrease in deferred. How much? 25. A decrease of 25. A decrease of 25. Then they are saying current tax was how much? Okay. Current tax is 890. Current tax is 90. So you say, therefore, total tax expense will be as follows. So current tax 890, decrease in D tax is how much? You say 25. So the decrease you subtract to reduce the tax obligation. So the decrease in liability means income. So if it was an increase, you add, but this is a decrease. So decrease you reduce to what figure? 860. Thank you. We are done with that. Notes are done. We can start presentation unless someone has a question. Unless you have an issue. There being no issue, let's kick off. Right belt a bank. What I know by latest by 1 we will be done. By 1. Lakini kwa nini mnanipeleka bio? Si hapa kuna watu walitoka nyumbani, especially watu wa physical. Wakasema ati class inaenda mpaka 6. Huh? Kuna watu walisema hivyo. Class is going up to 6. So expect me here by around 7:30 thereabouts. I mean, hapa mnanipeleka bio. Finish. Mpaka nimetukana mahali kwa nini mwalimu wetu? Watu wanafaa kupumzika. No, kesho hakuna class. Already tomorrow you relax. So it's even better. Tuesday you are here. So Delta Purity, what is the issue? So income, let's start with income. And let's start with interest in specific. Let's start with the interest issue. So look for those interests. Look for them. Who calls the interest on loans and advances? Look. All right, so interest on loans and advances, and I'm gonna put like that other one. So this is how much? 25, 75. Interest. Let's just bring them. Interest on government securities. Interest on government securities. On government securities, 22.64. Interest on deposit with other banks. On deposit with other banks, 646. Interest on deposit from other banks is an expense. Sure. Let's deal with interest income first. From other banks, that is expense. Interest on customer deposits, expense. Interest on long-term borrowing, that is also an expense. So do this. You say less interest expenses. Interest expenses. So interest expenses, we have on deposit with other what? Other banks. With other banks. How much is this? 662. Then from, sorry, this should be from. Then on customer deposits, 18.33. On long-term borrowings, 13.85. Can you add for me those interest expenses? Add for me those interests. Let me just say, interest on customer deposit is not an income. Well, Adam, how? When you deposit your money, does it? That is an income to you, not to the bank. The bank are suffering. They are the people paying you interest. So to them, that is no. Then interest on the bonds. You remember interest on the bonds? On the 8% bond, tell me how much. What was that interest? The finance cost. That is the one which was 12%. What did we get? 54. So can you add? Adan, I hope you have understood. Customer deposit is an expense to the bank. 39.34. 39.34. We subtract to get net interest income. Net interest income. So take the interest income minus 39.34. Interest on customer deposit. Oh, you require a kitab. 15, 51, 15, 51. Any other income to work hapo ndio tupate total. Any other income which my students are capable of seeing. Kuna fees? The other side. Yeah, fees, commission, and forex exchange income 60, 90. So fees, commission, and foreign exchange. How much? 60, 90. There is nothing else. So total income, total gross income, you add that one there. 1551 plus 6090 is 70 what? 70? 7641, good. Other expenses. Other expenses. Other expenses. Other expenses. So other expenses, we have top down to avoid omission. From top, try to from top, you have to see when omission. Cash, what? Hapo kunayo kweli pana. Inaroll hiyo side nyingine. Admin, sio? So admin expenses. Admin 21, 60. Other operating expenses. Other operating expenses. 11. Sorry, it should be here. 2160. This is 1163. This no ordinary, no share premium, no deposit, nothing. Is there anything we have not captured? Kuna hizo mbili. Can you add this? Kama kuna inashuku na sema mapema. Tusisonge mpaka balancing, uone balance useme I knew. I saw it mapema coming. So please, hatuna time. Tax, lazima upate subtract what a profit before tax, then tax. So, good. So this is how much? 90. Subtract so that you get PBT. PBT is the profit before tax. Then now you bring tax. 43, 18. So online, I want to go the other side. I hope we are together. Aki ndio mtu wa prepare. Hiyo 54 ya 8% bond imetoka wapi? Hiyo ni nani ameuliza? Kipruto. Can someone help Kipruto on that online? He's asking where is the 54 coming from? What else was online on? Can you answer him very fast? But you know, preparing to pass the Congress, the job does train, but after passing, hey, mtakuwa mnatembea hapa na So PBT is that, bring income tax. Watu wakishapita wakutana mwalimu unasikia ati kwa nini ilikuja vile hata haikuwa ngumu. Wale wasema nilipita kimungu. Wakiwa peke yao kimungu hata tulikuwa tunakuja hiyo class. God works. Income tax ile tulipata huko. Kifruto good. How much was the income tax? The one we did after combining everything. 865. So PAT, what do you get? 34. Other comprehensive. Yes. Those are people talking. No. Revaluation of PPE. What was that revaluation surplus? It was 650. Sure, come on. How much was the surplus? 650. However, wake up 650. Then out of 650, we taxed it. So less to de-tax, to defer tax, we took 30% of the 650. What did we get? The 30% of 650 on revaluation. We got how much? Yeah? 195. So this one went to tax. So you subtract. $455. Therefore, total comprehensive you add plus 34, 53. That is 39. Correct. Is there an issue? Anybody? Because how? Si tukanyage balance sheet tumalize. So kama kuna mtu amengojea hapa chini, mwambie kitu kama 20 minutes at most. 20. Yeah, almost. Kuna watu wanaenda Uhuru Park ile kuliona. This function. But I hear it is now is very beautiful. Our situation is only 6. Lunch. Who is today? Prayer. Yo que le tengo todo el dice. Statement of financial position. But attest to this. Hii imesonga haraka. Learning curve. Na hiyo ya 5th of December. Hiyo ya 5th pia inasonga. Ama there will be no option. Non-current assets. No, kuna mambo ya current assets. Asset. Na wazo ya hiyo cash ya CBK. Tunachukua 1 minute break. Your 1 minute break, I want you to tell me something. How much is the minimum deposit you must have with CBK for you to start a bank?
1 B.
1 B.
Yes.
Sasa 1 B sisi tunaanza tushikane nini? Yes kwa 1 B. Can you check? 1 billion tumeanza bank. 1 billion ni kidogo. Naona watu wanasema 10B. Hiyo ilikuwa ni kitambo. Hii hizi kwa 1 billion. Hiyo ni kidogo sana. I think hiyo 10 billion. There about 1 billion. Si kila mtu ungekuwa na bank. 1 billion. MPs wangeshikana wakuwe na bank wote. Deni gani? Child support.
1 billion. Currently, a minimum capital of 1 billion.
Which country?
Kenya.
1 billion.
Yeah, KSH, it's usually 1 billion. Start a bank or a mortgage finance company.
Google inasema 250 million. Let's start from top. Cash and balance with central bank. Cash and balance with with central bank 4046. How many 1 billion? Are you thinking of what I'm thinking? Huh? How about requirements? Yeah, the floats. Well, hii 1 billion unapeleka CBK.
Yeah.
Then urudi kwa working capital. Yes. Si working capital watu walete alafu msonge.
Just another question.
Yes.
For asking. That 1B that the bank does not deposit at CBK, does it usually come the interest or it's just that deposit?
But I can confirm, but mimi naona ikiwa na interest. But wanaitanga hii. Hiyo protection, something protection fund. I don't know that protection fund has interest. So that's something new. I will need to confirm if someone will CBK. Next, deposit with other commercial banks. Okay. After that, pia lazima ukuwe na working capital. So wakuachilie ukuje utuongeleshe. Uweke na upeane. What do I kwanza for the first 1 year? Government securities. How much is this? 44.85. Then intangible assets. Was there amortization? How many they give? Yeah, unachukua hiyo wenye Mungu ameleta vizuri. 15. No. Loans and advances to customers. Was there ECL? You could cut kama hiyo. Yeah, we should. Oh, okay. Nimeiruka sio? How much is it? 765. Okay. Liquid instrument, these are bonds. Those right answers. Three tips. Shortening the gap between you and this part. I bring PP. I think PP is the last. PP is how much? 74? 16. Anything else? Someone is saying the minimum deposit at CBK is 10% of the total deposit liabilities. Not two. As at this better accepted valuation. Oh. Yeah, so thank you. Valuation, wakasema imeweka hiyo kitu at what value? No, wait. We calculated the protection.
The valuation.
Okay. So that is 74.16 plus the revaluation surplus was 650. You know? Yes. 650. The asset which was revalued at a book value of 18. So you top up the gain. Sure.
This question is tricky because
Not tricky.
I mean, when you read like that, it's not explicit that it's
Because our examiner was our. The directors accepted a valuation report by professional valuer, which revealed the fair value of the PP to be 25. Wakisema hivyo unajua mtu anaweza fikiria ni PP yote. Lakini wakarudi wakaongea vizuri. The carrying amount of the PP amounted to 1850. Lakini ukiangalia PP yote ni 74. So it means 1850 was part of the 74. So they just did valuation of part of the PPE. So that one is what you top up. 650 plus that. What are you likely to get? 66. I don't think if there is anything. Can you add total assets? There is something. Equal. Other receivables in Napatikana, please wait. Where are they? Oh, I've seen. Other receivables 5660. 2493. I wake up. So me wake up. Other receivables. Other receivables, how much? 24.93. Thank you. When you may want to kuenda, sio? 59, 39. 7. Beautiful. Nobody cares about your answers.
So you bet those entries.
Sinizo wana mark the entries. Hiyo total hata vile tu sisi wa peke tulikuwa nafanyanga. Sitaki mfuate hiyo njia mbaya. That is a very wrong route. Equity and liabilities. Equity and the cap of equity and liabilities. Ama kuna kitu tumeacha, ama the figure is not okay. Are you getting the same? Naona watu wako na taswishi. Mnapata which answer? 735. May of the 735 say that? Bas. So but ni kitu kidogo. Na mpaka mwingine ameuliza kama answer ni wrong tuko sawa. Tuko tu sawa. 735. Equity and liabilities. Uliona kadri yako kupea 35 ukaona. So we start with equity. We start with equity, ordinary share capital. Ordinary iko kweli. Is there? Yes. Ordinary share capital on the other side. Ordinary share capital, how much? 44. Share premium. Share premium 25. Deposit protection. Deposit protection reserve 5,000. Retained earnings. So retained earnings 3623 plus your profit for the year excluding revaluation. So check PAT. The PAT we got, but don't include revaluation there. We got 3453. Yes, 3453. So can you add the two? 77. 70. 70. Oh, yeah. Revaluation. Bring revaluation reserve. So revaluation reserve. Check first of all if there was revaluation in the book so that you add. Check whether there was revaluation in the books, then you add. Check if there was revaluation. Hakuna, sindio? So just pick that one, 455. Hata unaweza sema tu other comprehensive, examiner atakuwa sawa na wewe. So weka hiyo 455. Correct. So this is 455. Nothing else. Can you add? There? Yes, you know suspense. Suspense normally records suspense records amounts which cannot be traced. Ukijaribu kutafuta hakuna. So kwa notes they were supposed to tell us that the amount appearing in the suspense was due to this and this and this, and they have not said anything. So I think it was just there to scare Ama. Yeah, it was there to scare, because once you give me suspense, we should trace what was not being captured. And the examiner always say, whenever the suspense, they say that the suspense account relates mostly in a issue of shares, which was blah blah blah. Then we correct. Kuna kitu hapo. How much? 9431. Liabilities. Iko wapi? Tuanzie wapi? Where? Sio the assets. Customer deposits. Wewe kutaka watu loan ni liability. Alikuwa nimekuwa hapo. Customer deposits ni how much? 7065. Long-term borrowing. Long-term borrowing is 56, 60. With moving into the future, If at all I'll be teaching, me there's something I've learned. Sitakuwa nafunza weekdays. I won't be teaching on weekdays. Moving to the future. Future is not this semester. Another semester to come. Classes zangu kama hii tunakujanga tutakuwa nafunza only on Saturday and Sunday only. Hakuna story ya early morning na evening. You know, I get you to be very fresh compared with early morning hata evening. Early morning watu wanakuwa na usingizi nyingine. Haijaisha. Evening mtu amepigiwa kelele. Sijui what. Alafu unakuja hapa tena kelele hesabu. But say people are very nice. Even I'm seeing online people who don't give me answers on normal days. They are so people just hizo classes zingine FM sijui what wafanye weekdays. Every kule tu weekend peke yake. It can work. Bado unamaliza. Sunday yote watu wanakuja tu class. Si wiki mmoja mpumzike. Okay. No. Other payables? Other payables is how much? 93. 27.17. 27.17. Proceed. Current tax. You remember the current tax? Current tax. How much was current tax? Then we subtract the installment. Current tax, then please subtract the installment. It was 890. An installment they have said is how much? I've seen installment somewhere. 360. So take 890 minus 360. 530. That one reminds me of deferred tax. Deferred tax. Deferred tax, go to the deferred tax account. Nichukulie your balance carried. The balance carried down. The balance carried down. 540 I can see online. Online leo wako sawa. 540. Then 8% bond. Unakumbuka ile bond? Ilikuwa bond hapo ilikuwa 8% bond. Yes. Can you check the balance carried down? It's the first working we did. Ile tulifanya si amortization. We did, yes, that one. 468. Can you check if there is anything we have not captured, kindly? Current tax. So, current tax was mentioned in a certain note. I don't know it was which note. Which note was talking of current tax, kindly? 3. Check note 3. Minus installment. Installment is in the schedule. So we are good. Okay. Is there anything we have not captured as per you? Yes, please. There was? Hiyo ili tuliweka huko kwa P&L. The difference in the P&L. Balance sheet, we take the carry down. So if there is nothing you are capturing, can you then try to add? We see. Nini? 25 gani? Tuliweka. You tupata income tax expense. Tuliweka. How did we get income tax expense? Check the workings. Tuli subtract, tukaitoa out. Bayana. You tupata income tax expense as a working. Bayana. Yes, we check. Are there still some things which we have not captured? Eh? Wanasema nini hapa? Ngoja. Suspense account hiyo kitu haina maana hapo. Let's check what we have not captured. We'll be able to know. Let's check what we have not captured. You can even use the difference. Your difference can guide us to know. For liabilities, have we captured let's check. If there's something we have not captured. Online muangalie, mchukue some few seconds to check. Customer deposits. Okay, let's start with liabilities. Have we captured customer deposits?
Yes.
Customer deposits captured. Have we captured deposits from other commercial banks? Nasi iko ndio hii. Hebu check. Number 3 from top. Check number 3 from top. Check number 3 from top. Huh? Yeah, sure. That is a mistake. Hakuna deposit from other commercial bank. Yeah, fine. So, Mingapi 33? I'm at 41. Actually, oh yes. I've remembered actually, when we did this question sometimes, there was a mistake. See, there was deposit from other commercial banks, which was 3324, which was being omitted from the schedule. I've just recalled. Yeah. Yes, inafaa iongezwe kwa schedule. I remember when you were doing last semester that actually see last semester the original paper. Kama mnaweza access, kuna watu wako access ya custom. Whoever, we normally take these papers then we compress. So kuna huyu mtu wetu ndiye alikosea. For original paper it was there. Deposit from other commercial banks of 3324. There was that omission. At the bottom, why? You can just add it down there. I don't need to. Next semester, I will do it next semester. Now I will actually tell them to adjust. Whoever typed for us, we normally take them, then we retype. Then they are the so pesa hapa. Mtu akifotokopia kitabu yako asome akuulize kwenye metoka. Wewe unamwambia angalia original. Deposit from other commercial banks. But if you have the custom, you can download those past papers. You will see there. It was 3324. Can you add this thing? Because that means this total will be 20 or 4, giving us 39 something. So walete kitu kama hivi. Mtapita naye. Au mnaona kwa example mseme kuna bank nyingine imekuja. Yes. Oh yes. Proceed. I want to enter the class. Online we are done. You can leave the marking. So the marking repeat on current tax. Current tax. Note 3. So check note 3 minus installment. Installment is in the T balance. So thank you. Do have a nice weekend. Hey, it's a long weekend. I hope what were they bado wako hapa. What were they? Are you still around? Karen and the group. Karen, are you still there? Others can log out. I want to talk today. Karen, are you still there? Wanjeri? Oh, so we are supposed to have a class on Tuesday. You remember that other class we did not have because of something which came up. We never completed, so it will be done on Tuesday. So Tuesday morning, we will not have a class, but all those classes, I will make them up during the week. So kindly, Karen, pass that information to others. Tuesday morning, we won't have a class. You rather call them. Kuna watu wa Samangi group, just call them to inform. So thank you.